G'day there. Welcome to the closing bell on the 22nd of March for me on the Friday afternoon. Bit of a dull week this week, apart from a few things, I guess. The Fed being a bit more dovish with gold sort of and Bitcoin, I guess, recovering a bit. But that only lasted a day or two before some selling returned. Copper picking up. We know that which is a positive thing, I think, in that space. A few interesting little companies there. But really not that much going on this week that's standing out massively. And so I thought it would be best to just, cover off a few of the key markets and show you a bit of a sense of where we're at. But I wanted to kick off just giving you an idea of something I've been thinking about. Because as a commentator on the market, where every sort of week you're expected to come up with some view on this or that. Um, I think it can end up clouding things a bit from the way I actually operate, which is that, really high conviction things come along quite rarely. Because let's face it, markets are volatile. It's very tough to be making calls on what's coming next rather than talking about what happened in the past, which is what most commentators do. Um, I'm trying to give you a heads up on things prior to major moves. And, you can't just do that week in, week out. So I wanted to give you a bit of a sense of how I see things as I go about this closing bell video, where most of the time, I'm going to be just talking in generalities and talking about trends and where the support and resistance is above and below, and what I could expect to happen if levels break. But every now and again, I'm going to have a much higher conviction view on things. So that's why I wanted to have this little chart, just giving you a sense for me. Let's say this is a year, if we have time uh, on the x-axis. On the y-axis, when I have sort of pretty low conviction on things, on where the market's at and what's coming. And then, there's moments when you have high conviction. And the great bulk of time is spent down here. I mean, it just is. Even if you have a good sense of things, even if you think, oh, it's trending up, all looks good. But most of the time, you're not in a state of really high conviction, saying, I'm willing to tell thousands of people X, that I think this is not only going to happen, but it's going to happen soon. And those moments do arrive for me. The trading model, hopefully, if you've been watching these videos, etc., you see every now and again I will either hand out a stock that I really like, or say something in a way that says, look, I actually really do believe this. But that's not all the time. And, let's say over the year, there is one time in the year when I'm like, this is absolutely a lay down misere. Um, and then there's other times when, I've got higher conviction, but I'm not putting the house on it. But, week in, week out doing these videos, I'm going to spend most of my time down here, giving you sort of odds on things, showing you, look, if this happens, the trend would probably change, momentum would shift, but, we're in an uptrend, so let's just let it go. And I guess I don't want uh, these long periods of being in a low conviction state to muddy the fact that I do actually have these. And these probably are the highest value moments throughout the year when I'm doing these videos. When I say something and I go, whoa, look at this. This is interesting. I think this could happen. It could be a big move. It's worth getting involved in. And that you know the difference between the two. That we have a lot of this, but that doesn't mean this doesn't exist. And, it could be months of, and especially you'll see in the last few years where the ASX has gone sideways. I mean, no one's picking that day to day. It's just constantly mean reverting, constantly getting the bulls and the bears wrong-footed. And you don't want to be trading that stuff. You only want to be taking high conviction bets. But as you do this for long enough, you realize that the confidence of youth, where you thought you sort of lived up in the high conviction area and you could every week in, week out say, oh, I know all about markets. This is going to happen, that's going to happen. That's just BS. Doesn't happen like that. Markets are far too difficult to hand out money on street corners. So I just wanted to kick off with that, just because this week, there's nothing necessarily jumping out at me. And so you can, watch these, know the difference. Most of the time, we're just going to be chatting in generalities about the state of markets, but every now and again, I will hopefully be able to alert you in what I say, in the fact that I have high conviction on something happening. So just kicking off with the 2-year bond yield in the US. It is sort of an interesting no man's land we've gotten into. And I think it all stems from this. The fact that we've had this really sharp move up in rates. And that's a cycle like the ones we've seen before. And the market knows all about this. The fact that we have these big uplifts in rates, and a moment comes when that ends and the trend shifts, and more often than not, rates then fall very rapidly. Now, at the moment, we're in a state of where the last year or so after the fastest and very sharp rise in rates occurred, they're just holding at a high level. Now, that can cause problems. As I have pointed out before, the longer it goes on with rates up at this level, that can, in the end, cause something to break. And I've sort of pointed out commercial real estate in the US as one of those things as loans roll over at higher rates. If rates stay at a very high level, a lot more companies could get in trouble, banks then having losses, etc., etc. So that can keep going until something sort of breaks, and then you get a very sharp fall in rates, but then stocks are falling as well. And so this is 2008 to 2009. Stocks were crashing at this point. But at this point, stocks were actually rallying massively. So, there's two options. Either something breaks and, markets tumble and rates tumble, or rates can fall back away. Growth holds in there. Pressure comes off companies and stocks could really rally. Now, throw in AI as well. That could be our future. But as you'll see, the long-term trend hasn't actually turned yet on my just trend moving average sort of method, a 10-month exponential versus 20-month simple. It's been pretty fabulous for a long time, giving you a sense when those trends were actually shifting. So it's sort of close, but not quite there. And you'll see in the US dollar that the US dollar is in a similar sort of situation of indecision, where with those rates as they are, are rates going to drop rapidly and the US dollar is going to fall? Or, is inflation going to take off again and rates start heading up? You'll see on this US dollar, and this is going to feed into things like copper, gold, etc., etc. US dollar getting dumped, that'll give gold obviously another big leg up. But if this is the very long-term chart of the US dollar, and big picture, you can say that this is trending up in the very big picture. And the US dollar has had a big pullback, but you can see it's holding above the midpoint, which is that point of control. And that is also obviously the top of the range really for the past, however many years. That goes back to 2015. So there's a case to be made that US dollar's holding in pretty well. And if it then turns up, uh, could really take off again. Um, and you can see that over this last year or two, it's gone nowhere. And this is that indecision that the market is in at the moment. So it's sort of a situation of, breaking out to the upside. You can then have a strong story, and breaking to the downside, sort of in no man's land, if you like. And it's been stuck there a long time. So uh, uh, you can see that the long-term trend is actually down. So we have had, and I have said recently that, I'm basically have to be a bit bearish on the US dollar here. And the last few months, it's come back to retest these long-term moving averages. So if it does get hit from here, that all makes sense, doesn't it? Long-term downtrend, initial sort of rally back to retest the long-term resistance. And if it turns down, breaks these lows, all of a sudden you've got a US dollar heading down to this area here, which is the buy zone of this massive wave higher over the last few years. So that's sort of the setup. I think, it's a real flip of the coin right now. And this is why there's, most of the time you are scratching your head and just waiting, saying, right, well, I don't want to put my neck on the line too much right here, because you can make a case either way. And I like, everything on my side to then come out and tell people a view. So that's sort of the world we're in just at this minute, with those 2 years on the edge. Inflation, is it really coming off? Fed getting dovish, which is getting people bullish, and commodities trying to turn back up. So let's just have a look at gold. And gold, I think, is a good example of what I'm talking about. But when you've got a view and you're saying, okay, this is trending, as I've been saying to you for a while. I've been bullish on gold and talking about it with you. And you can end up with a big picture sort of view. Let's say when it's trending and the long-term trend's up, and breakouts occur. And I can really look at that, and you can see this Bollinger Band here, 2 standard deviations below. I'd even look 3 standard deviations below, just to be certain, and to sort of just have the view saying, look, this is trending. Unless it breaks down below this level, that Bollinger Band below that 20-month moving average, I'm going to sort of let it go and see what happens. And you can track a trend a long way doing that. And then when it fails, all right, I'm bearish, things start turning up, the trend starts changing, breakout, uptrend, and you're then riding it again. But the last few years, it's been really tricky. It's been stuck in a range, and now it's breaking out. So we have going to new all-time highs, a 3-year range here being broken out of, but also an 11 or more year sort of range that gold's been in. So from my point of view, it's saying, okay, let it go. But I just have to have lines in the sand. So I don't know that it's going to just keep going and going and going. And when the trend goes, sorry, I didn't finish this off, I might just be saying, look, I'm having a strong view of this trend is, as long as we've got no monthly close below that 10-month exponential moving average, it can go on and on and on. And, here was your first real sign that it's weakening. So, I could have that view on this. Saying, look, I think this is breaking out. But if we get a monthly close below that 10-month moving average, which would also be back below those previous highs, uh, um, I'm going to stay bullish and let this thing run. But if the music stops, if we get a big reversal, fails below there, monthly close below that, also below that previous highs, I mean, I'm going to change my view. I'm going to say I'm going to back off. But the reason that that's good is it just lets you sit back and allow these trends to evolve without any really strong conviction, being willing to be proven wrong and to adjust course. But for the moment, saying, right, this is an interesting situation. Seeing gold after, watching this huge trend that occurred for years and years and years, we've really had a lost decade in gold. And here it is after lots of false starts for 3 years. Is it actually breaking out? And from that, from a bullish case, well, why can't it do that? Really? That trend could just go and go and go. I certainly don't know, neither do you. It's just that the market is in a state where this could happen. The odds of it are better than it has been when it was, trending down and looking pretty dodgy and sort of stuck in a range, mean reverting for years and years and years. So that's really how I'm looking at it. And, again, looking at those rates where it feels like we're close to those rates really starting to drop and that could feed into the rally in gold. So here's the copper price on a log chart. And by that, I mean what we're looking at here is percentage changes that across the chart are similar. So rather than being just a nominal chart where you get, 10, 20, 30, 40, 50, all the same distance, that was supposed to all be the same distance. It's showing you that, let's say, 100% move here would be the same as a 100% move here. So that might be going from $2 to $4, and from here, 50 cents to $1 or whatever it might be. So hopefully that makes sense to you. Otherwise, Google logarithmic charts. And looking at this long-term chart on copper, just to note, now we had this immense run back into 2007. And just want you to note, that where copper has been holding this last few years is right at the top of that range. The sell-off we've seen in so many commodities, look at nickel, but look at so many others, all really getting quite hammered. And copper has just been treading water for the last year or more. And I really like it when you get that sort of standout of, comparable things, looking across the commodities, lots of weakness across the board. And there's one commodity that is holding its own. And what that usually means is when commodities recover, that is often the best performing one, the one that didn't sell off when all the others did. So that's why I'm sort of interested to see whether this turning up in the copper price could actually be sustained and turn into something a lot better. I'm always, wary, and where I'd get wary is looking at this big rally we've had. I think I've shown you this before, but obviously you may never have seen it. We've got that rally from the 2020 COVID crash up to here, very clear wave, and coming back to the point of control and actually holding. It's just if things do turn back down, lots of resistance up here. If it can't get through that and turns down, through the point of control. That's 350. We're up about $4 now a pound. So under 350, and I'm very wary, and we could see another wave down. But then I'd be getting super bullish on copper because I think the long-term story is still very bullish. But as long as sort of 350 holds, I think you've got to be getting a bit more bullish. And I'll switch to a regular chart so you can see what it looks like. And, there is all these stories about a bit of undersupply situation going on. We know long-term copper is in demand from many different sectors, with renewables, obviously, the big one adding more demand. So this may be a bit of a starting gun, and to be looking around at your copper exposure, back up above that sort of 430 odd is certainly going to be interesting if we can see this current move actually take off through there. It's going to start looking really bullish, but that, quite a slow moving thing, copper, obviously, a massive market, that one. So that's just something to have in your cap, thinking about what sort of copper exposure you have at the moment and whether it's time to start looking for some. And, this is the S&P 500 going from strength to strength. It's certainly, breaking away from that high from a few years ago, isn't it? And trending beautifully. So until we get a change in those conditions, we have to allow it to continue, and long may it continue. Hopefully you'll remember, I was a bit bearish through here, and then I turned bullish with that long-term trend shift, and then the retest of the moving averages, and then the monthly buy pivot. So that's when I went pretty much 100% bullish. And you can see why there's no reason not to be bullish. I think there's resistance up here. I won't go into the details, but there is sort of up around here. There's an area where I'd say it's going to ultimately see some resistance and a bit of a correction, but it may not. AI may take over. Companies may start reporting much better margins on the back of AI, and companies may look cheap. So, for the moment, you're allowing this to take hold, and let's hope the microcap space could come back to life, and we're going to have a good year after a couple of years of pain and suffering, which is the only way you could describe it. So, that's really the state of play in the ASX. If we do see selling, the false break I talked about last week comes into play. Still aware of that. And we're happy to change my tune if that happens. But big picture, you've got to just be bullish and only willing to change your view if the market tells you to. All right. Well, that's enough for this week. I'll come back with more next week. Cheers.